I want to get started here with the export inspections that were released this morning. It was higher for corn, higher for sorghum, a little bit lower this time around for soybeans, but higher for wheat. So all in all, this was a little bit of a report that was on the positive side. 1,269,074 metric ton of corn were inspected for shipment out of the country. Sorghum was at 139,000. Soybeans were down from last week's 570,000. This week, 413,957. And wheat was just slightly higher at 363,881. Corn market started out with weakness on the overnight trade. Corn continued to weaken as the day went on. We went down to 340.5 on the May contract. Now we're at 341.25. But we're down 4 3/4 cents on the day. December is down 4 1/4. It's at 360. The May soybeans are steady. July is up 1/2, but the new crop November is down 1 at 875 3/4. And July Chicago wheat is down 3 1/2 now at 553 3/4. Todd Horwitz with Bubba Trading is here also. Todd, good to talk to you today. Anything that we can take away from these outside markets that we can apply to the grain markets? The reason I ask that is because I saw some comments this morning by traders that I was reading that were talking about the investment money, the outside money, how it seems to be taking a closer look now at some of these commodities in some of these cases.
John, it has been, but it's been very frustrating to look at the grain markets. Last night they opened up, and even early this morning, wheat and soybeans look terrific, and they're up 7, 8, 9 cents each. And corn was coming back, and now here we are. Soybeans are back to flat. Wheat is actually down about 8 cents last I looked, and of course corn is lower. It's a very frustrating market. They're like aching and waiting to explode higher, but they can't seem to get out of these trading ranges. And of course, every time the outside markets, the Dow rallies, they take money away and they put it over there. So that we're really seeing this back and forth. Last week, the down days, grains were higher. The up days, grains were lower. And I think that's kind of the rotation we're having right now. Now, I do think they're getting ready to pop and explode. But again, it's a very frustrating time right now for a trader or for anybody who owns these, waiting for these to start to go higher.
Frustrating for agriculture indeed. Well, I want to look at crude oil. I want to get your thoughts over here. You and I talked many times about this crude oil market. We are down $1.19 a barrel on the front month right now at $20.32. Got as low as $19.85. Where do you see support in this market?
Well, I think support somewhere right around here, John. When you look out into the future a little bit, now oil gets much more expensive as we get forward, right? So we get in that contango formation. When we're afraid, we're in backwardation. Now they're very complacent. It's easy to sell oil here. And I think that you're going to see a pretty stiff rally here into oil. Now, again, I'm still short oil, but I'd like to be looking for a spot to buy it here, to look for it to start to go higher. And I think 20 may be the area. Maybe just a little bit below. But at some point here, we're going to see a little bit of a pop because they're going to start cutting production. They're going to start cutting supplies because we've had a glut for quite a while. And this is how we expected it to play out. Now I expect to see somewhere around here to make a bottom and see a little bit of move up. Now, I don't see 50 coming, but I could see going back to 25 or 30.
Good point. Well, and heating oil, that diesel fuel is what it's based on, down 6 pennies right now at an even $1 a gallon. And that's the way we are on those front two contracts. I tell you what, Todd, stick around with us. We'll be back in just a moment with more with Todd Horwitz on RFD TV and Rural Radio 147. Across rural America on Monday morning, that's an opportunity for cattle buyers at these packing plants to go around and look at the show list and see what the feedlots have for sale this week. That's what this morning has been focused on. Let's look at the live cattle market and see what it's focused on. April down 67 at $100.28. June down 77 at $88.65. And the August down 105 at $89.40. Feeder cattle for April down $2.25 at $118.35. May down $2.20 at $118.72. August at $125.05. That's down $2.05. All of those front five contracts down at least $2. April lean hogs down $2.88 at $55.58, and with the expanded limit, May lean hogs down $3.70 now at $53.92. June down $4 at $60.25. Todd, first of all, let's talk about this hog complex. My goodness, talk about just continuing to fall. This goes back to your comment earlier. It's very difficult to know where to position yourself with these markets because they are so wild and so unpredictable at this point.
John, the hogs have been really unbelievable. They keep switching back and forth from making you want to step in and buy them to now you want to sell them. It's been, again, I said, it's been a very challenging market. I think one of the big things we're missing in these markets is liquidity. And I think, you know, when you start infusing all this free money from the Fed and all these other things that's going on, it really affects the liquidity of markets, which is why we're seeing such dramatic movement from day to day. I mean, I can't remember a time being expanded limits for so long, right? So many times over the last few weeks, we've been in expanded limits across the board in the meats. And I think that's just telling you that there's really a lack of liquidity here right now. And you've seen some wide spreads from cash to futures. So there's a whole bunch of things going on here that probably will eventually lead to them going higher. But again, the turbulation here, trying to play with them is very challenging and, of course, very nerve-wracking for the guys that own them.
Okay, I want to talk about the financial market here for just a moment because you and I have many times talked about stimulus and how the Fed is trying to deal with all of this. Do you think now that we've got a little bit of calm coming back? When I checked the VIX this morning, I think we were around in that 50 level, maybe a little bit above that. So is there more calm now starting to come back to this market because of what the Fed has done? Or do you think that we still have some uncertain times ahead?
Oh, no, I think there's a lot. John, the VIX at these levels, there's a lot of uncertainty coming. I think there's still a lot of room to go on the downside of the equity markets. I think there's going to be some big selling. I mean, the Fed, you can only create so much. It's not going to create growth. They're only printing more money and allowing some people to live a little bit longer and pay some of their bills, but they haven't solved the problem of production. They haven't solved the problem of labor and putting people really back to work. So at the end of the day, this is a nightmare that the Fed is creating as well, because really what they're doing is they're just increasing our tax burden without really increasing the growth that we really need to see. So at the end of the day, I think this will be a mistake and it'll be a mess when it's all said and done. And I think the markets have a lot of room to go down. As long as the VIX stays up here 50, 60, we're going a lot lower. Now, again, we may be up today, we may go up tomorrow. But overall, with a high volatility, it means the markets have a lot more room to go on the downside.
Okay, Todd, thanks a lot. We'll talk to you again tomorrow. Beef cutouts here at midday. Well, on the lower side here for both Choice and Select as well. Choice down 171, Select's down 386, and a 113 load movement. Now, the pork cutouts, a little different story. Carcass is down 146, loins up 346, hams up 425, and Christina, the belly market, down $7.35. So sharply lower over there, 63.60 is where we're trading at today.